we're at a spot here now, guys, kind of where we left off last week, where the Fed is starting to break things, but they're just not breaking in this neck of the woods. And as things continue to break, those are it's kind of like we got to bob and weave and dodge meteors that are going to come in left and right, kind of out of a video game, where it's a good thing that they're breaking things, because we get closer to where we want to be, right? We discussed last week, if things don't break, we could be here for an eternity. All right. And like we spoke about the last couple of weeks, it doesn't have to be something in this country. It doesn't have to be something that's on their radar. Usually it's not. Usually it's something that comes out of left field, and they can put a country off the radar, out of business. So again, the UK, they've had their issues, so that kind of stemmed up this week. But you can see that this tightening cycle, this whole drain of liquidity cycle, it's only a matter of time. It's only a matter of time. And again, there's no way to forecast it. Like, you could attempt to forecast these things, and you can go broke doing it. It's nearly impossible. The smartest minds out there can't even come close. All right. It's just something. The best thing to do in these times is always take a wait and see approach, right? Like I'll give you an example. And if you remember the Sunday webinar, again, if you're a member, you remember it. Otherwise, you have no idea what I'm talking about. But I mentioned to you guys that even with everybody and with positioning and sentiment as bearish and skittish as it was, that because of what's going on at this current time, you want to take a wait and see approach, meaning, instead of trying to front run a potential squeeze, get more information, get more evidence. How are things looking that morning? How are the credit markets looking that morning? How is sweeper activity looking the morning? Right? Credit spreads, the credit markets we talked about, keeping an eye on these things. And if they confirm what we're looking for as far as squeeze is concerned, we can make some money trying to catch one. But to stick our neck out and bet on a multi-day type of squeeze, it's going to be easier if we get a little bit closer. But right now you can see today was a perfect example. Like, let me show you a little bit what I think we might see here, and depending on the news and everything else. But we already got one big piece of news with this UK shit that went on. But let me show you guys. Oh, this always is a process. I'm gonna overdose on Advil tonight. Let me see. Hold on a second here. All right. You see, I want to go to a bear market, because corrections are a different animal. So let me just show you the bear market. Let's go to 2008. That's the last one. Okay. What am I doing? I could have just done that. All right. So you see here, it's really common that you get sentiment so lopsided in a sense. And when you have this current backdrop that we have right now, you really don't get that follow through momentum. As far as upside is concerned, it's not it's a common thing in bear markets like this. So look here, see, okay. So this kind of, I think, what resembles what we're in right now. Bear with me. Okay, here we go. Okay, so here you have, again, forget what happens after the fact. And that's not what I'm trying to bring up here. That's not the point I'm trying to make. I'm trying to show you guys this. Okay, so you see here how you had a downside niner. You were kind of stretched already multiple days. This is back in, I think it's 2008, if I'm not mistaken. Here, Those of you in the room know, we refer to this as what are the super cyan blue kind of thing, meaning just price action's extremely oversold. Okay. And what happens is you get these 1-day squeezes, and then the next day they just roll over, right? And then happens a couple days later, you get a squeeze, and then they just roll over. And it goes on for a lot, it feels a lot longer than it actually is, where you get to a point where everybody gives up on the squeeze, right? There was so many eyeballs looking for a tactical squeeze here. You don't have to be some market technician to know we're oversold. Anything you look at, we've been down, what was it, prior to yesterday's rally, like 7 straight days, right? So you kind of get to the point here where everybody gives up on a potential bear market rally or squeeze, okay? Because they got bit already, trying to bit in the ears, trying to catch it. And then you get something to that effect here that develops once everybody's rung out. So I guess what I wanted to get across to you guys is not only does it feel like the bear market rally and squeeze becomes hopeless, but it also takes a little bit of time to develop, in a sense. Okay, it's not something that boom runs away from you. It materializes over the course of days, and what you'll realize is there'll be more negative news that comes out of the UK or maybe somewhere else, and the market will get hit, and we all think the market's going to get hit pretty hard off it, but it ends up reversing. You know what I mean? The selling gets bought, and that's usually a sign that sellers are tired. They're done. They're out of ammo for now, and you get something like this. But that's honestly, I gave you the best news, my most promising news at the start here, because beyond that, you know where I stand. You know what I mean? You know where I stand. So I think we got work to do when we need something to really break hard to get us from A to Z a lot quicker than we would like. It's nothing out there yet. This UK news, it's not enough. The Fed will eventually capitulate. Okay, they always say they won't. Everybody always says they won't. They will, but it's going to take a lot. It's going to take a lot this time. It's going to take a lot to do it. They're not going to jump and flip just on anything. So that means a lot more pain, a lot more agita. Again, I'm talking about for the overall markets. Like I told you guys last week, I think there are going to be individual pockets, individual names that they've been beaten up enough to where they can march to the beat of their own drum in themselves for a bit. But as far as the start of a new bull market, we got work to do. There really isn't. There's nothing, again, nothing that I see anyway, nothing that anybody's talking about. But it can happen. It can happen. As far as somebody, Saeed was asking, is there anything breaking yet? I don't see anything to the point where it's going to get the Fed. And listen, again, these are not new points, but for anybody who's new, the Fed pausing, I think, is a temporary relief anyway. You understand? I'm not talking about a Fed pause. I'm talking about a legitimate Fed pivot, right? If the market really wants that for a bottom, you got a long way to go. And everything that happens along the way in the interim just prolongs the process. Like, let's say you get a Fed pause. Okay, let's say something acts up and the Fed says, all right, the economy is obviously tightening a lot more aggressively than thought. We're going to chill out here. Okay, we will get a legitimate squeeze off that. Okay, you'd have bears running for cover. You'd have bulls thinking the bottom's in. You'd have a lot of excitement and some short-term momentum, and it's going to feel pretty good. But I'm telling you from my experience, that's the worst thing that could happen. Because a Fed pause just tells you the news is a lot worse than anybody thought. The Fed is pausing for a reason, but they're not cutting. They're not implementing QE. It would be the perfect track. The perfect track. Now, again, we might need it. You got to understand, when you go through the type of bull run that we've been through, especially coming off the last couple of years, with the explosion of retail and everything else, sometimes it takes a lot of hard work to get the cleansing that you need to start a new bull market rally, a new bull market. So like Lourdes is saying, you might need that trap off a Fed pause, and then the market chews them up and spits them out one final time, and they're not coming back after that, Lourdes, right? Like, if they come in off a Fed pause thinking there's a bottom and they get bitten in the rear end for it, bend the knee. That's ultimately what it might take to get to what we want. But listen, I don't want to sound corny, right? And I'm being dead straight with you guys. I would try not to focus on all that. I'm telling you, like, what I would do, okay? I wouldn't try to focus on that as much, because the more you focus on how much work needs to be done, how much is left, potentially, all that stuff, you get negged out, you get frustrated, and you're going to miss any little opportunities that may come around now on a tactical basis to make some money, because you're so negged out. But that's the last thing you want to do. If you've been waiting patiently, doing whatever, even playing small, spinning your wheels, but if you've been waiting patiently to this point, you should take that as a huge positive and utilize that momentum to get you to be patient and disciplined to get to where we need to get to. Okay, we hope for the best. We hope it comes quicker than possible, than we possibly think, I should say. But whatever it is, and you bide your time. You try to keep yourself busy, occupied, like we were saying. Try to make a little bit of money. If at best you make some money and you got through the process, no one better than you. But I wouldn't neg myself out or try to neg myself out on potentially how long this process could take, because it can get to you. It can get to you. Another thing, I guess we're starting to see a little more negativity out there. What do you guys think? Right, a little bit more, but not as much as we're going to see when this thing is over. We're starting to see, right, in regards to the economy and stuff like that. Especially the global economy. I think even more so than here in the States. Things are holding up quite well over here. I mean, the Fed threw in the kitchen sink, for crying out loud. You got a lot of countries out there in shambles right now. Here, that's what makes it makes it such a large hurdle to get over here. That you need job losses, you need the economy to turn. It's a big ship. There was a lot of momentum, a lot of fiscal stimulus, a lot of QE, a lot of stuff put into this economy. A lot of shit been propping this economy up. It takes a while to get to the point where the Fed is going to feel like they did enough. Let's see here. And the other thing too, I wanted to mention, because of my headache, toothache, I'll probably forget a bunch of things I wanted to talk to you about. We could be seeing the start of the fund flows starting to crack, as the news starts to get negative out there. We're definitely seeing the retail trader crack. Okay, that's already underway. the investor is starting to show some signs of cracking. And, if the quicker we can get that process started, then in reality, hold on, let me mute this guy. Then you don't need Fed cuts and all that stuff. You know what I mean? You don't need to wait on the Fed per se, because a lot of the selling would already be done. Where's the flows? Flows, I think I put on there. You gotta be kidding me. I can't. I just had it on my other screen. There's a form of it in here. This is basically making the point, kind of what we were talking about, where when the economy gets into a recession and people start losing jobs and stuff like that, that's when you really start to see outflows, and here's the chart here that shows it over here on this side. The dark blue, that's the flows, and this is earnings, right? So they sort of follow each other there. So we need, look at this, like, move, right? Like, look at that chart. It's a scary, that's a scary chart. I don't know what else to say about it, right? It scares me. Yeah, hardly a bend. And this is the world as a whole. If you just look in the States, you've been bull flagging here for a while. There's no rollover yet. But it's just a scary chart to where we need to be. Okay, it can happen. It can unravel quick once it starts. Once the process starts, it can happen quick. But getting to that point takes a lot of work, and we're working on it right now. What here? That's what is this? This is probably the dollar amount, no? Cumulative billions, cumulative since 2010. Yeah, and this really doesn't even tell the picture. You see, you had a lot of. Are you talking about this one here? This process covered by redemption cycle. I don't know. This wasn't the chart. This is from Barclays. This is not even the chart I was looking for. So I don't even know this chart well. I was looking for the one from Goldman, but I thought it was I can't find it. It's just not coming up here. Let me see. Flow. There's a million things on the flows. You guys know what chart I was looking for. Oh, you know where am I looking on the? Hold on. If I'm mumbling my words, you're just tuning in. I got a severe toothache, and leave me alone, please. Okay, hold on. Let's see. Oh, this is another one, right? Hold on, I gotta put up the section at the top. Let's see. This is not even the one. This is the one from Deutsche Bank. So this gives this gives a good picture of it. So equity is the dark blue here. You're getting right. You're getting a little plateau, and then stop. It finally stopped. Well, here and here, I guess. Stop going higher. You can't, like we've been discussing for week in, week out. You can't predict these things, so don't even try to predict when it might happen. Just let it happen. No, that's a good point that you bring up, though, Eric. You know what I mean? I think not even that they're in these names, because they probably are, but I think sentiment wise, it has a lot to do with these names, you know? Like you're talking about probably the most popular stock, the most common stock amongst the retail crowd, and investor wise, especially. Okay. I mean, this thing, it looks like a cup and handle prior to the last couple of days. It didn't even look bear, right? It didn't even look bearish. So you got to get this thing to look scary, right? Like even remember like NVIDIA when it made the switch, right? Where people start to say, oh shit, how much lower can it actually go? Like they think Apple was like some bank account you put your money into and it just sits there until the market turns. So sentiment can change quick, but you got to change it. You got to change it. All right. And the thought of just keep buying, keep putting money into the market as long as you have time. And that, I'm not saying that there's anything wrong with that. More than not, usually that's a great strategy for investment purposes. But when you come out of a bull run like we've had, where everybody believes the same thing, that all you need is time on your side to be successful in the market, that thought's got to get out of people's heads. It's got to get out of people's heads, right? So like, for example, Apple, they've had it, NVIDIA, they had it in. Now, now you're getting some people questioning, all right, well, where's the low in this NVIDIA? You know what I mean? Can it go to 60, 70 bucks? Right. So that's the concern that we need to see people start having. Not that they just can buy and they think that it's just going to chop around, go sideways until the market turns. Kind of what Apple's been doing. You got to get that out of the picture here, because that's not good. You don't get that capitulation you want. Yeah, AMD too. But I don't know, man. I could be wrong. So I don't put them on the scale of Apple. Like I think Apple is more widely, like even the guys on CNBC, right? Sometimes those are the best sentiment indicators. Like you put on the halftime show CNBC, and in the same breath, they're like, oh yeah, this market's scary. We just gotta wait. We gotta get through it. We gotta wait it out. I'm just gonna buy Apple. Like what do you mean? If it's gonna get scary, you don't think Apple can get hit? You don't think you can lose money in Apple if it gets scary? They don't realize, you know what I mean? They don't realize what bear markets can do and what they look like. Yeah, Tesla too, right? I mean, again, I don't put it in the Apple category because Tesla's more of, I don't know, maybe like almost like a cult following type stock. But yeah, probably, right? But you know what I mean? Like Tesla, I almost feel like Tesla investors feel that there's risk. You don't think like people think there's risk in Tesla? I could be wrong, I don't follow. Like Apple, I think most investors feel like it's the least risky thing you can do in the market. Yeah, but I think the people who buy Tesla and have been buying Tesla always knew it as a risky proposition. It was just high reward, high risk. The people that are in Apple are in it to hide from risk. I think that's the difference that I'm getting at. That's the difference I'm getting at. And where stocks are stocks, if it's a stock, it's got, risk just as much as any other stock. And unless you come from like a generation of players and traders who played pre-2008, you really don't understand that. We've seen blue chip names go poof, poof. The definition of blue chip didn't exist anymore. You understand? Like I see you guys throwing out symbols of like Enron and stuff like that from back in the day. Like a lot of you newbies don't realize that a lot of those names were blue chip names. They were in mutual fund, key mutual fund holdings. Nobody thought these names would go under. And I'm not saying Apple's going under, but I think people have to people got to learn the hard way that it's equity, it's just like any other equity. There's risk. The market gets hit, that thing gets hit. It may come back one day, but you're in too early, you got some downside to get there. And it's not cheap. Yeah, Lucent went to zero. WorldCom, how about WorldCom? I knew my grandfather, all his friends, every guy over 70 years old I knew at the time owned WorldCom at the time, Bernie Ebbers. I mean, WorldCom was, a monopoly back then in the industry. And now, like, people don't even know what the hell WorldCom was, right? Bernie Ebbers was a legend back then. So it's got to happen. Again, I'm not, I can see it already. I'm not saying Apple is the next WorldCom. I'm just making the point that people got to understand there's risk in that name. They gotta be taught there's risk in that name. And they got to get the same feeling when the stock starts heading south, like it is right now, like they would get in any other stock heading south, an Nvidia, a shop, anything. Like when does it stop? I don't know is the right answer. Right? When does it stop going down? Not, oh yeah, it's gonna hang out here until everybody capitulates, the market bottoms, and then it's just gonna go straight up from there. Yeah, well, there you go, Vereen. That's exactly what I'm talking about. They think it's like the perfect evidence of what I'm talking about here, guys. Look, bonds, right? People didn't think you can lose money in bonds the way they did this year, right? And stocks at the same time, 60-40. Yeah, that's the popular line, Presley. We're buying quality. And they refuse to tell you what's in that quality basket they keep buying. If you ask them, you push them, they tell you Apple. They don't name anything else because everything else is cracked. Now Apple, cracked. Like what's quality? Tell me what's quality. There's no such thing as quality. There's no, honest to God, there's no quality. Bear markets, there's no quality. Yeah, cash. I don't care what anybody says. I mean, I could have this argument with anybody out there. You're going to tell me Microsoft and Apple and these names are quality. I'm going to tell you, you haven't been around this game long enough. I'm sorry. There's no such thing as quality. Like what's it when they say just start, this is a good time to buy, but buy quality. What's that mean? Tell me what that means. I want to know what that means. You know what I mean? What does that exactly mean? I buy Apple right now. Okay. And if that's true, I just got smashed. Thank you very much. Now what do? I buy more quality? Do I buy more Apple here? You understand? It gets easy to throw these lines around and make yourself sound smart around people. Yeah, Microsoft. But I'm saying this, these stocks have I've seen all these stocks, even better names, go dead. Microsoft was dead for ages. IBM was Apple. IBM, nobody even wants to touch right now. Intel was Microsoft. Now it's a piece of garbage. Or Intel was AMD. And now AMD is Intel. Yeah, they just, because it's, everybody, like for me, I don't know. Call me nuts. I think this has just as much risk, if not more risk, than anything else out there right now at this point. Why? Because you have everybody and their mother in this thing right now, hiding in this thing. Where, you can make the argument that some other name that was quote unquote quality a couple months back and got its ass kicked, at least got its ass kicked already. Like Apple didn't get its ass kicked already. And I got news to you, Apple too was a dead stock after the 2000 boom. PayPal, good call. That was another one, right? Oh, but PayPal's not Apple. Yeah, now you're saying that. You weren't saying that back here, I guarantee you. Meta, right? Meta's not Apple. Ark, they'll never give me that. GameStop, there you go. Look, there's been a lot of put buying in this GameStop. Did she finally crack? This thing didn't crack. Yeah, but see now, I'm not going to feel as fulfilled when GameStop goes to zero, because it's now because the splits at 20 whatever. You understand? Now it goes to 0, 1, 2, 3. They made it easy, fooling the riffraff, giving them extra shares so they can lose double the money. Yeah, I wanted to see this thing. Where was it? It was a 4-for-1 split, right? What was it? What was the split? Yeah. I wanted to see the stock go from 100 to 90 to 80, 70, 60, 50. So I could count its ass down in $10 intervals. Now, I got cheated on that. But you guys, I know we flew off the coop a little bit here, but you guys know what I'm talking about, right? So this started now. That's a good thing. All these stocks, people got to lose some money, and we'll be okay. And that's what I mean when in regards to like a new bull market, guys. When I see some buying come in to some of these old names, it's almost like I get negged out. I get negged out because I know it's more than likely not going to be these names that lead a new bull market. So it's like slapping me in the face. Wake up, you idiot. It's a bear market rally. It's not a new bull market. Like it slaps me in the face right off the bat with some of these names catching the flow off the bat. Which one, Presley? The Meta? Nah, Praveen, I don't think, I think 2008, well, we'll see how this ends, Praveen. We'll see the end of this. But up till now, I think 2008 still takes the cake as far as the scariest. This is more like the 2000 bubble. This is more like the 2000 bubble. I think the 2000 bubble had a lot more head fakes, which made it more difficult on the way down than this market. This market, you really could have spit on this market for a lot of this downdraft, meaning, just sat on the sidelines. You really could have. When the 2000 bubble blew and the lead up to the 2000 bubble blowing, like, think about it though, guys. Like, we were warned about this happening this year. You understand? It wasn't like this snuck up on us. Like, we knew the Fed was going to start implementing QT. We knew they were going to drain liquidity, right? The only thing we didn't know was that inflation was going to remain elevated. Right? Some people felt that, but we didn't know for sure. Okay. Once that was evident, that inflation wasn't just transitory and rolling over, it was very easy to spit on this downdraft and not lose money. And that's a win. You guys, a lot of you may not look at it that way, but that's a win. If you can avoid the bulk of bear markets and not lose any money and make money in bull markets, you're going to make a lot of money in this game. A lot of you I don't think look at this game that way, because I think you want to get to a point where you can thrive in any market. And that's just so hard to do, man. That's just so hard to do. Like, you have to be elite as far as a trader to accomplish that. There's not many who could do that. So you're asking a lot of yourself. But if you can sidestep bear markets, in other words, survive bear markets and not cripple yourself and just thrive in bull markets, you're going to make a lot of money in this game. You're going to make a lot of money in this game. Right? I mean, again, Druckenmiller, right? You see Druckenmiller, like he's having a tough time in this environment. You know what I mean? It's not easy. Yeah, you need a team, and I've seen obviously teams blow up in these market conditions. It's tough. It's really difficult. Like, because even like if you have a bearish bias, you got to sidestep these squeezes that can really hurt you. And as you see, they're not easy. They're not easy to time anymore. Because you know what the difference is? I think so many more people are looking for the bear market rally because they know like that's where the bulk of their money they make during this time is going to come from on the long side. So I think you got more people, more players. What did I do? More players looking for that bear market rally. And when you have that, you get this. You understand? Where it doesn't happen. Yeah, Ashley, you're right. You're right. You got to be wired in a certain way. And we're just, as human beings, we're not wired that way. You know what I mean? We're not wired that way. So you got to take advantage. You got to look to take advantage of the things you can do well, right? And I'm sure each and every one of you, with whatever edge you may have, you find it's extremely helpful in bull markets, and it can help you make a good amount of money. And you got to hang on to that, going back to the point, you could sidestep something like this, where even if you lose some money, it doesn't matter. You just, again, the way to look at it, like I've been telling you guys, is the way to look at it is to look at it and say, all right, okay, I made some decent money in this run. Forget about where, when, how, but you made a good amount of money in this run. How much of it did you hang on to in this debacle? That's all that matters. You understand? That's all that matters. Because then when the turn comes, it's going to be the same shit again, right? COVID lows, same exact thing. Okay, you made some money in the bull run. Did you avoid giving back a big chunk of it, all of it, into the COVID crash? If you did, you had another opportunity to make a good amount of money. That's the way the majority of us have to look at this game. If you think you're going to make money up, you're going to make money down, and you're going to make the same amount of money doing it, and you don't have any weakness and all that stuff, it's you're asking a lot of yourself. I'm being dead straight with you guys. Yeah, and that's the problem in bear markets. And Eric, I think even more now with people trying to catch these squeezes. I'm being honest with you, I've been in this game a long time. I don't remember any bear market with so many people calling for squeezes on like CNBC. I've never been a part of a bear market where people calling for squeezes. Like every time the market hits a new low, you got a whole day of people coming on CNBC calling for an oversold squeeze. Yes, and that's exactly what happens. The next day, right? The next couple days, you find one big squeeze, and people think, it's there, and then they get caught in the downdrift like today. But they're going to get frustrated too. They're going to get to the point where they feel it's not worth trying to look for those squeezes anymore. They'll get there. It's just part of the cycle. It's just a matter of time. They'll get there. They're going to get there here, I think. I really do think so. They're going to get there here. I think you got another couple days where maybe, another rally or two fails, and they're going to give up on a legitimate squeeze. And then you're going to see something like this. At the least, you're going to see something like that. Yep. So that's why, like on Sunday when we were talking, When you guys were wondering, like, if I felt a little more bullish over the short term because like to put the call and stuff, I explained to you guys how, like, you see, like yesterday, you have the environment looks squeezy for the day. Take advantage of it for the day. Forget that greedy part of you that's telling you to hold it for more upside. Take it and see what tomorrow brings. And today, you guys know it, from ding, ding, ding in the morning, didn't look too good, It didn't look too good. Like, look at, like, even you see the bombs, and we were talking about this yesterday into the rally. Even with the market rallying, there were players positioning for downside in Apple the last few days, Like, you could see it just not looking too healthy. Sharpies, no one to. Yeah, Sharpies have a different agenda than we do. They have a different agenda than we do. So it makes it really difficult to mirror what they're doing right now. They have a different agenda. They could sit here with limited upside and sit through grenades going off left and right, and the market has some more downside, but maybe they feel there's not too much more downside left. Who knows? But this is a tough environment for anything. There's no secret sauce right now. You're in what makes this trickier than any other bear market is you have a Fed that's leaning on it through weakness into a recession. You understand? They want a recession. They're orchestrating a recession. Yeah, it's ridiculous. Like, could it be any more obvious what they're trying to do? So maybe they, because it is so obvious, it hasn't been a smooth ride to the downside because it's been so obvious. But it's not something you want to start. At any point, obviously, if you built a basket of longs, you'd be talking to yourself. Yeah, it's ridiculous now. It's ridiculous how much they run their mouthpiece. It's ridiculous. So similar to here, what we want to see, okay, this is what I think the blueprint you want to see for any multi-day week period of a rally, right? You remember how this developed here? That's what you want to see here, okay? Any rally that you feel like is going to run away from you in a sense, okay, and you're not seeing the constructive signs from credit markets, rates, flow, you want to get in the middle of it, make a little money, scalp it, and step aside. You want to see something develop like this, right? And then at some point in this pattern, you start to see the things we're talking about, the constructive stuff that we saw here. You start to see rates, yields top out, right? You start to see credit markets, credit spreads calm down. You start to see the flow improve. Like, you want to see all that develop if you're going to look to make a play for a multi-day run like we had here. But I got news for you. You don't have to front run it. You can play alongside it as it happens and make money. I don't know why a lot of people don't want to do that. They feel better if they can just buy and sit. But this is not the market for buying and sitting, This is not the market. Like, this, is one of the things you're going to see top out. Okay? This is not going to continue to make new highs if you're going to get a healthy bear market rally. It's not going to happen. It's not going to happen. You're going to see it consolidate more than anything else. You know what I mean? You're gonna see it do something like this, kind of like we look for in those credits default swaps. You know, when rates are doing this, the algos are going to slam everything. Yeah, the V-shaped rallies. First off, Kenny, Hartnett hit the nail on the head from Bova. By the way, he has his note comes out tonight. There hasn't been any V-shaped recovery rally without fund flow capitulation. Not one. Every V-shaped rally followed fund flow capitulation. Every single one. Yeah, Bitcoin, I wouldn't touch Bitcoin with gloves. That's just me. But you know, I've been singing that tune for a while. You guys know that. I wouldn't touch Bitcoin. Again, that's, you know, that's what the Fed wants to kill here, in my opinion. The Fed is looking to kill it. You know? Now, I'm sure there'll be rallies, but it's hard enough to trade equities. I'm gonna start trading Bitcoin. You know, like what I don't know what's the play on Bitcoin now. I mean, it's a speculative, you know, it's almost like a spec stock the way I look at it. No, I don't know. What do you guys? It's not an inflation hedge, is it? You guys still believe it's an inflation hedge? Like, what do you think it is? I put it in the same category as NFTs, and here you go, mark it up, jar farts. No, I think it probably has more lasting power than those. I don't know. Yeah, but I mean, everything has value. Doesn't mean it has to trade higher, right? We're talking about Apple trading lower. Apple has a lot of value. Doesn't mean it can't. It can't get hit. I don't know anything about the application or any of that shit. You guys know when it comes to tech, I'm clueless. You know what I mean? But it's speculation. That's all I know about it. It's speculation. So if you overlay money supply to Bitcoin, you know, pretty much moves in the same direction, right? And right now, money supply is going in the wrong direction to where you want to own Bitcoin. But there could be crazy rallies in it. There have been. Where's the I don't have it on here. Yeah, I don't have it. Is this it? No, that's not it, right? What the hell is this? I don't know what that is. Yeah. I mean, interventions all over the place. Well, we're going to see more of that. You know, it's hysterical in the UK, like they're QT and they implementing a form of QE. Like they can't even do QT right. So that's why, guys, as bearish, you know, as dire as I've been, because of what the Fed's been doing, the last thing I believe is that this can continue for a lengthy period of time. I really don't think, like, in other words, when I'm talking a lengthy period of time, it could be a bear market, like similar to the bear market we came out of the 2000 bear market. But eventually, I don't see how the Fed can right things. I don't see it. Yeah, pretty crazy, right? QE Monday, they're raising rates. That's why, like, we have headaches. Europe is in shambles over there. You know, Europe is in absolute shambles. But you know, again, I'm not trying to. I know you're trying to lure me into bashing Bitcoin, but I'm not bashing Bitcoin. I look at it as ARK or anything else that's speculative right now. You know what I mean? What else? You guys, before another pain shoots up to the side of my brain over here, any other things you guys wanted to see or talk about? What do we usually? Nike bombed, did they? Well, that's good. That's good. No. So here's the thing too, and like earnings, it sounds like there's a lot of work to do. There's not as much as you think. The growth side of things, a lot of things got demolished, right? Earnings got taken down, estimates, cuts. What it's moved to now is more of the cyclical names and the behemoths, the apples of the world, the quality, as we were saying. So I think that it's not as much work as you guys think that's left as far as earnings are concerned. Deer, yeah. There were puts there. The Apple put buying has been pretty crazy too. But the whole world's in shambles. You're asking a lot for earnings to hold up. And can I just leave this? This is the last thing I want to say in regards to this. Okay. A lot of these problems that we're hearing from earnings is all because of inflation and because of the ports being jammed up, coming out of COVID, all that shit. Okay. That's right. Strong dollar, all that. It's got nothing to do with what the Fed has been doing and everyone's scared shitless about. That's where things really start to deteriorate. Deflationary. You know what I mean? That's where you're going to see earnings really get hit. When it's not that they can pass on the cost to the consumer, there's just less consumers with money to buy. That's still to come. That didn't even start yet. It didn't even start yet. I don't know what they said in Nike, if it's the start of it there, but from up till this quarter of earnings, we didn't hear anything about that. Target, Walmart, that had nothing to do with it. Had nothing to do with the Fed draining liquidity and raising rates and putting a hammer on the economy. Once we start to see that get priced in, that's when you can start to try to pick bottoms in some of your favorite names that you think are going to be around. I'm sure the majority of them are going to be around, but you want to get in or at least start nibbling after that happens. That's why a lot of the smart money's not buying shit. Why would they want to buy ahead of that? Why would you want to buy ahead of that? Right? The consumer's still banging out credit cards. They didn't roll over yet. You know what I mean? They didn't budge yet. When they start losing jobs, when they're running out of money, when they got crazy bills to pay now with interest rates at a higher rate, and they can't spend any more money, that's when you're going to see a lot of the names we like really get hit. And maybe some of them already got hit and don't have that much downside left. But you need that news. You need that egg to hatch. You need it. And then, you could kind of look past bad earnings and stuff like that. You know what I mean? But right now, we haven't even started to see the start of it. We haven't seen it. Not even the start. Not even the start, especially in the cyclical areas. Forget it. So anybody else, when companies go to credit markets, and go to credit markets, right? The yield, forget about the yield. They're not even going to be able to get credit. You know that, right? They're going to start tightening the spigots. They're not going to lend money to anybody because they're worried about the fall. Yeah, we've been seeing a lot of the cyclical names, Praveen. That's what I'm referring to. A lot of the cyclical, economically sensitive, global exposure type names. Those are the names that are really getting hit here, especially with put action. Some of the the growth areas, especially on the more speculative side, on the more speculative side of things, they already been hit. So you even got some dip buying in some of these things. Energy is going to be interesting to watch. I told you guys, I'm torn with energy. I really, you know what I mean? I really don't. I can make the bullish and bearish case both make sense to me. They both make sense to me. What scares the shit out of me with energy, just like with every other commodity, is again what the Fed is doing. If they succeed in what they're doing, that's not good for energy. It's just not good. I mean, you want to see a playbook? Maybe it's different, but 2007, 2008, that's exactly what happened. Energy looked fantastic going into that. You know, now if you're going to tell me that even with the Fed doing what they're doing, that inflation, because of supply demand issues, going to remain sticky, and oil, you know, because of huge demand is going to remain elevated, then you know, these energy names can, you know, stay up at higher levels for a while. But once the economies roll over, yeah, well, Buffett, without a doubt, will keep buying on the way down. I don't know about you, but I don't have Buffett money. There are a lot of names I'd like to buy all the way down to zero, but I'd be broke before I even get started. You know, those are the things we got to remind ourselves, right? Like, look, Buffett, again, it's great news. You got Buffett backing, but depending on where you buy it, you can lose money there too, just like you bought a shitty stock, especially options. Yeah, yeah. But yeah, they still, a lot of these names still look good. These are the only names seen buying right now. You know, these are the only names that are seeing people buy, real buyers. Yeah, yeah, yeah. That's good, right? I can make both cases. So if the energy stocks go up, Ashley, I can tell you I told you so. If they go down, I can tell you I told you so. Covers my ass. It covers my ass. All right. So listen, to put a bow on it, that the main takeaway, okay, all kidding aside, the main takeaway, we got some economic numbers tomorrow, inflation numbers again, whatever, up, down, sideways, crooked. We kind of, what we want for us to get a legitimate shot on catching a multi-day move, right? You kind of want to have it set up something like this, okay? Where you get the ups and downs, the market kind of just doesn't really go anywhere, holds levels, and you start to see some of the stuff that was creating the selling improve. Right? Like I told you, the 2-year tops out yields, right? Yields in general top out. So if you see a day where there's bullish sweeper activity coming in, and you got yields rolling over, the dollar rolling over, you can have some faith in that squeeze having some legs. You understand? Because if you're not seeing that stuff, those squeezes are likely going to get sold into, if not that same day, the next day, like we just saw. I don't know. Again, Lourdes, maybe something blows by the next meeting. We got time. There's a lot of time still, right? When's the date of the next meeting? November, isn't it? So you got a lot that can go on from now to then, Lourdes, you know? I think it's November. Oh, eternity. Eternity. Lourdes, we may have them cutting 75 by that time. Who the hell knows? That's a lot of time. You know, so we'll see. You know, again, this can go into the shitter pretty quickly too. If you start to see some contagion out there, right? What happened in the UK starts to happen in other places, different things. You see spreads start to blow out. You can have, you know, you can have a little period of some feistiness here. You know, who knows? I'm telling you, I've seen crazier things. You could get to a point where you may get capitulation because of how scary shit gets. So, one step at a time. We try not to think too far ahead, Lourdes. It's impossible right now. It's impossible. So that's why I would try to keep the blinkers on right now. First thing first, right? You want to see this market, even if it goes lower, the selling slow down a bit, met with the other things that we look at, showing some constructive signs. Exactly how this low kind of set up back here. And then, and the reason why I say that, because let's say you do want to make a play on ahead of a multi-day move, right? Let's say we get a setup like this here, where we start to see the market's still volatile, but sellers can't make much headway. And we're seeing some decent sweeper activity in names. Very possible. Okay, whatever names. Okay. And yields have topped out, spreads have stopped widening out. You can find a name or even bet on the market that you get a little move coming out of it. So that's why it's ideal for that to set up that way. Otherwise, I think you just take it day by day and evaluate what's in front of us for that day. I think that's the best way to do it. Least amount of risk. Anyway, that's for sure. All right, but we'll keep tabs on it. We'll keep tabs on it. Survive, my friends. Survival. Goal number 1. All right. Sorry to cut it short. Yeah, I'm hoping this tooth agony goes away by tomorrow morning. We'll see what happens. Thanks, guys. I appreciate it. Enjoy the rest of the day.